Hey everyone, welcome back. Today we're going to do something different. I'm going to do a recap of the whole year of what the DXY did, how the fundamentals actually affected the dollar, and where I think it's going with the current data we have. You're definitely going to want to stay to the end. If you're new to this channel, definitely hit the subscribe button. So we're going to kind of show you how technicals and fundamentals work together based on the data we've had this year. And then at the end of this call, I am going to go over this week's recap and basically just do a more in-depth recap of just this week as well. And then I'm going to show you both the bullish argument, which is the path of least resistance right now for the DXY. And then I'm going to show you the bearish argument as well for if price did come down, why it would happen. And then I'm going to show you guys the institutional position sizing and the institutional data that's basically backing everything I'm going to say. So right off the bat, this is a little bit squished because I made it on my other screen. It was made on a 49-inch, but you guys can just see the gist of it. We're basically heading up. I want to talk a little bit about what's going on. So this range here, right at the beginning of the year, it just ran inefficient. Because this range ran inefficient, the daily range has been inefficient this whole time. So I just started playing with the current more immediate ranges, which is basically the 1 hour. Now I'm going to get into the technical aspect and how the fundamentals tie in. First off, right at the beginning of the year, NFP higher than expected, CPI higher than expected. There's a couple of smaller news in here. Ultimately, orders get accumulated, price breaks out, we get an impulse. As we know, the market builds orders, the market impulses, the market builds orders, the market impulses. Now, this next little stretch is a little bit more interesting. We have a lot more news. Yes, there are some news that I didn't put on here. I didn't deem them to be very impactful. Most of the stuff we're focusing on is unemployment, sales, GDP, PMI, CPI, and basically anything to do with jobs and employment, and obviously FOMC. So that's kind of the focus I have. The big news that did make any changes are listed on here. All data is sourced from Forex Factory for anyone that wants to go check this stuff out. Again, we kind of get into the second phase accumulation, you could say, and you could see that the majority of the news are all coming out better than expected for the States. There's a couple unemployments that are slightly higher than expected. Those are some bearish arguments. But you can kind of see how many more bullish arguments we have. With all these fundamentals that are coming out, we basically create bullish market structure, as you would call it. So this is bullish structure on both fundamentals and technical. So right now, the two are kind of aligned, which is very good, high probability. The next accumulation here eventually breaks out where NFP pretty much comes out twice as high as expected. What does this mean for us? It means we have a new trading range. The way I look at ranges is I pull a fib from top to bottom. You can see this range never hits 50%, meaning that this range just keeps running inefficient. And ultimately, this range never rebalanced. I'm just going to make this red so you guys can see this a little bit easier. Whoops. Alright, so we can get rid of this, we can get rid of this, and just for the sake of clarity, we'll make that red. So basically, right now, my most immediate range, it doesn't get rebalanced, because when this range doesn't get rebalanced, I keep pulling the fib, which means price got to retrace back to the 50, which we did last week. So this range is balanced. That tells me that price will likely keep going up. It's the path of least resistance. Also, the news this week were kind of more of a bullish argument once again. Now, what I want to make note on is if the market does pull back, and it can, and I'll show you the institutional data of why, my expectation would be that price would come down to the daily rebalance. You can see this. I have the 50 pulled here, and with that in mind, if price does want to start coming down and turn bearish, my expectation would be this rebalance needs to happen in order for price to continue doing what it wants to do. This is less probable. The most probabilistic scenario here is that the dollar continues bullish. Now, let's kind of look at this and see how it worked out. So if these ranges are running inefficient, it's only a matter of time before the market pulls back. So what this tells you is we're getting better than expected US dollar news, better than expected US dollar news, better than expected US dollar news, but the market's still pulling back. With the high impact news, sometimes it is basically delayed would be the easiest way I could put it. And if you want kind of an example, this would be accumulation. Basically, we know that the market has a high probability of continuing that direction. Eventually it does. This could be the case here. If that's the case here, obviously we just stay bullish till we're not. The bullishness for the dollar will likely change when these unemployment numbers, CPI numbers, NFP numbers all start coming out worse for the States. When these numbers start coming out worse for the States, Powell's going to say the rate hikes worked. It is time to start cutting rates. When US starts cutting rates, the dollar will 100% lose steam. When that will be, your guess is as good as mine right now. As of right now, they're speculating it'll be around summer. For this week, with the current data I have, I expect the market to kind of do what it will do here. Whether this takes a few days or next week, right now the expectation would be just to continue. If the market doesn't do that, it'll likely have some catalysts such as these job reports I listed this week. If these come out worse for the dollar, this could cause us to basically come and achieve a daily rebalance. And if that happens, we'll have to wait for more data. But the expectational thing would be for the market to continue in the same direction. If that doesn't happen, then obviously it's going to be backed by more economical data, which we currently don't have. But as of right now, the dollar itself is definitely bullish. So that's kind of what I wanted to show you guys on the chart. For anyone that wants to see how it all works together, this is literally 2 months, and I basically summarized it all the stuff I deemed very important. But you can kind of see how all the bullish fundamentals are creating bullish market structure. Price pulls back, doesn't rebalance. You work with the new ranges that are created, which kind of leaves you with this. So that's our scenario. So that's kind of where we're at with the DXY. Now I want to show you guys some institutional data here that would argue a bearish dollar and why. So we'll just go to something like EURUSD. Any US asset will work, and we'll just look at the dollar index. So the part we're really looking at here is how these longs and shorts are stacking. And this is the only reason I have an argument that price could come rebalance the daily. If you guys are looking at this position sizing, look at the DXY's position sizing on the shorts. They've been going up for substantially for some time, right? And if you're looking at the long side of things, in the last month or so, it hasn't really changed much. Like, you could say we did drastically come down on the longs, but the thing I'm really looking at, how the short positions are increasing. This could be done for like I said, a higher time frame rebalance. This is the only argument I have for a dollar seeing some bearish price action. In the event that happens, the first idea will be it's a pullback to continue bullish. And if that fails, obviously we have a trend change. From the Euro USD point of view, I would say it's actually starting to look like it is realigning for longs. Remember, so leverage funds have a 3 to 12 month outlook. So these are kind of your smaller hedge funds. These aren't the big boys, but these are pretty big. Like, they're big. They move the markets, but they're not your pension funds. They're not your, BlackRocks and stuff like that. But these guys are basically starting to align with Euro USD going long again. This could take weeks. This could take months. That's why right now, even though the numbers are starting to show there's a bearish scenario coming, I'm not going to say it's bearish until it happens. The bearish on the dollar, just to be clear. The one thing I do want to show you guys too is the asset manager positioning, and these are the big boys. This is your pension funds, your union funds, your BlackRocks, big funds like that. They're positioned long on the euro futures, and they're actually positioned long on the dollar futures as well. So in the Euro USD scenario, this just looks like bullish price action. In the DXY scenario, it's also looking like a bullish price action, which pretty much aligns with what we have on the chart right now. I find with these guys, it's not the best immediate measurement because these guys have a 1 to 5 year outlook, whereas your leverage funds are kind of more immediate for like this year. And the way you calculate this is you would add the USD shorts to the euro longs, and then you would add the longs on the dollar to the euro shorts, and you can kind of add it up, and it's telling you how the leverage funds are positioned. Just off the top of my head, this actually makes Euro USD again long, and the dollar is currently short by these guys. So this is why I wanted to show you guys, even though we have the fundamentals, even though we have the bullish structure, there is a good possibility the market does pull back. It's not going to happen tomorrow or this day, but it could start, this week, next week sort of thing. So definitely something to be aware of, and if it happens, you'll know why. I assume if this does start playing out and Euro USD turns bullish and the dollar basically sees a bearish retracement, the reason for that would be, of course, to rebalance the daily. Anything beyond that, I'm going to wait for more data. I'm going to update you guys more on that as the data becomes available. We'll do a quick session recap of what happened this week. Everything this week was mostly bullish. Nothing changed. FOMC, remember the meeting minutes are just a update of what happened in the last FOMC. So if there's no major change, it doesn't impact the market that much. They said what we expected. They're not cutting rates. Nothing crazy. So price moved a bit, but nothing crazy. Fed governor basically saying no rate cuts. PMI better than expected. Weekly jobless claims better than expected. Home sales better than expected, which is why I'm thinking in the near term, as of right now, I would say the dollar staying bullish makes sense. Also, with the institutional data I showed you, there is a high probability there's that bearish pullback coming. And obviously we won't know when it's starting until it starts to show us that on the charts. Same thing, couple more months of inflation data is what they want to see. So this brings us back to summer rate cuts at the earliest. At the beginning of the year, it was 6 or 7 rate cuts according to the analysts. Now we're saying 4. Depending how the data comes out, it may be less. There is this whole thing about the People's Bank of China and what happened with their interest rates and stuff. I don't know how that fully affects the dollar aside from how much goods basically US buys from China. So this must hurt the US dollar somehow. I don't actually fully understand how this does it, aside from the trade deals. We'll kind of have to see how this plays out. It's not really what I'm concerned about at this moment. We're more looking at jobs and interest rates, and obviously inflation. This here, the 1 PMI came out a little bit worse than expected. However, it stayed above the 50. As long as it stays above the 50, I have no concern. So again, this doesn't really play into things too much. This one here is a little bit scary. So institutional investors basically can't be selling equity holdings at the open and the close of each trading day, which basically says if they got money invested in China, they're limited to how much position sizing they can basically get out of. Again, not a huge deal yet. I'm gonna have to just let the weeks play out and see what this does. Overall, all the data is looking good, and overall, this is my most probabilistic scenario. This is, again, fundamentals, technicals line up. We're just going to roll with this. If price keeps coming down, you'll know that your price target on the DXY is 102.816. And this would be kind of the next area I would expect DXY to show us what it wants to do, whether it starts accumulating or whether it continues down. That's a scenario. I don't want to say it's happening until it's happening, but if it does, you'll know why. Yeah, that's basically all I wanted to cover today. So I showed you guys the arguments. The arguments right now is essentially nothing is changing. From a Euro USD perspective, same thing. It's bullish right now. On the hourly, my expectation is that this continues and seeks higher pricing. If it doesn't want to, it'll be the same reason as it is in DXY. And that's ultimately kind of the data we're waiting on. So, with that being said, whoops, my bad, guys. My bad. Euro, I'm actually expecting to stay bearish. Totally got mixed up. Basically bearish market structure, bearish fundamental data. Not so much bearish Euro data as much as bullish dollar data. So with that being said, the expectation would likely be a realignment and shorts to resume. I don't know if that's happening from this level or if it's coming up higher. Either way, the expectation would be for price to do this. And that kind of plays in with the whole DXY scenario we talked about too. So that's where we're at right now. We did have our first bullish close in I guess our second one this whole year, but this is our first bullish close in about 5 weeks on the weekly, 6 weeks. We'll see what this week brings, but as of right now, the expectation is always to not reverse the market. So again, either price goes down, price goes sideways and goes down, price comes up and continues down. These are all the higher probability scenarios. If the market turns bullish, we'll revisit this in the coming weeks and we'll see what kind of economical data backs it. Until that happens, I don't really want to put that out there. And we'll just kind of roll with that. But yeah, I hope you guys enjoyed this. Make sure you tune in next week. We'll be doing these every Sunday, and we'll kind of just keep track of everything that's going on, and we'll keep reassessing everything that's going on. And maybe throughout the next few months, for those of you guys that are struggling with fundamentals, you can kind of start understanding how the fundamentals and technicals work together. So that's kind of my goal with all this, and that's my goal with keeping this tracked. We can kind of see what fundamentals started driving the technicals in the other direction and how long it took. Sometimes it's days, sometimes it's weeks, sometimes it's immediate if it's something like NFP. But yeah, I won't keep you guys any longer. Make sure you tune in next week, and I will see you then.